Hello, I'm Andrew Russell, a commissioner with the Maricopa County Superior Court's Probate Department. This is a videotape on conservatorship training, the first year of your conservatorship and beyond. We're going to talk about the setup of the conservatorship, the institution of the conservatorship, and finally, the accountings that you'll be required to prepare and to file with the court. The agenda will include your responsibilities and your duties as conservator. The bond, the letters, the restriction of assets that will occur or has occurred when you're appointed as conservator. The inventory and budget that you need to prepare and file with the court, and then you need to have the court approve. The budget amendments, should an amendment become required. Preparing the account, the first account, the initial accounting that you prepare, and then the subsequent accountings that you'll prepare during the conservatorship. A conservator's responsibilities can be found in several places, most notably Probate Procedure Rule 10.1. We talk about the 3 Ps. A conservator is required to prudently manage costs associated with the conservatorship. Preserve the assets for the benefit of the ward or the protected person, as we call them. And protect against unnecessary costs that the conservatorship would incur. The rules that you're going to be obligated to follow are found not only in Rule 10.1, but also in the Order to Conservator, which you signed and which the court signed when you were appointed conservator. Also, the rules of probate procedure in general govern the process, and you can see a website on the screen where you can go see those rules and review them, and we recommend you do. Also, the conservatorship forms that are used for the filings. We provide forms that you can use for all of your accountings, your budget amendments, and your inventory that you have to file. When you get appointed as conservator in the court, you have to get a document issued from the clerk's office called Letters of Appointment. And you also have to post a bond. You have to do that within 10 days of the hearing where you're appointed as conservator. The bond will equal the amount of unrestricted assets in the conservatorship estate, plus 1 year of the estimated income that the protected person would receive. One way to reduce the bond is often to add a restriction to an asset. For instance, if there is a piece of real property in the estate and it has a particular value, we can restrict that asset, and then it's not considered an unrestricted asset and wouldn't be part of the bonding requirement. The letters are issued upon your providing proof that you have been appointed conservator by the court and that you have filed any bond that is required. When you get the letters of appointment, again, that's the formal document that appoints you as conservator of the estate, you'll need to record that letters of appointment with the recorder's office in all the counties where the protected person owns real property. That tells the whole world that you are the conservator, that this property is subject to a conservatorship, and that there will be additional rules placed on any potential sale of that property. It also protects the protected person from controlling those assets, because after all, that person has been deemed to be in a position where they cannot control those assets. Only the conservator can act on behalf of the protected person. Any assets that have to be restricted generally within 30 days, and you'll have to file proof of that restriction having occurred within 30 days. This might include a home, other real property, a bank account, an investment account, a retirement account. Those types of items that we talked about earlier would keep the value of that restricted item out of the bonding requirement and reduce any potential bond. You would use Form 10, if you don't have your own, to file the proof of restriction within 30 days. The inventory and appraisement is one of the more important things that you'll have to do. Within 90 days of your being appointed conservator, you need to do what we call marshaling the assets. You'll start obtaining mail that would go to the protected person. You'll secure the assets. Perhaps you'll change locks on a residence or change a combination on a storage locker. You'll title the assets that the protected person owns in the name of the conservatorship. You'll change it from perhaps a piece of property owned by John Doe to a piece of property now owned by you as conservator for the estate of John Doe. You'll look for any missing assets. You'll see if perhaps websites in different states might direct you towards property or other assets that the protected person owns. You need to change the titling on all of those assets. You can do a public records search. Ask questions. That's what we always say. Ask questions. Repeat Your job is to find all of the assets that the protected person owns and title them in the name of the conservatorship. You'll include all assets that would be under the supervision of the court or the conservatorship: bank accounts, real property, personal property, vehicles, boats, recreational vehicles, cars, retirement accounts, investment accounts. There are certain assets, though, that you might think of as assets that belong to the protected person, but that we would not include in the conservatorship. For instance, a trust asset. An asset owned by a trust is by definition not owned by the protected person, it's owned by the trust. Potential inheritances, that's potential. If the money were received, well, that would be an asset of the conservatorship. But if it's a potential inheritance, it's not. Other assets that would not be under the control of the conservator, that's something for you to find out. There may also be community property issues that you have to investigate. If the protected person is married, his or her spouse may have a right to a portion of the community property assets that are part of the marital estate. The valuation date for the assets in the estate is the date of your letters of appointment. The date the letters of appointment were first issued, whether they were temporary or permanent, the date that that first set of letters was issued is the date that you'll use for the valuation on the appraisement. We use the term inventory and appraisement. Inventory, I think we can all figure out what that means. Appraisement is really basically an appraisal of the assets. What are the value of the assets? And again, we use the valuation date as the date that the letters of appointment were first issued. The measure of value is fair market value. What is the fair market value of that asset? And that's something that you need to determine. You'll also prepare an estate budget. What do you believe the estate is going to cost for the following year? You'll use Form 5 of all of our forms that we have, Form 5, and you use a 9-month time frame. The starting date is the date, again, that your letters of appointment were issued. The ending day is the last day of the 9th month after the permanent letters were issued. Not the temporary, after the permanent letters were issued. That way, you have a 9-month period that you're using for the budget. And that's the initial budget. By way of example, if you were appointed on a temporary basis on January 5th of a particular year, and you were appointed on a permanent basis, and by appointment I mean the date letters of appointment were issued, if that occurred on March 15th of that year, your first budget period would start from the day that the letters were first issued, which would be January 5th, because that's when the first set of letters was issued. But the period would go from 9 months after the permanent letters were issued. So your budget period would be from January 5th until the end of December of that year. Similarly, if there were no temporary appointment, there was just a permanent appointment as conservator on February 1st, then your reporting period would go from February 1st until the last day of the 9th month after that, which would be November 30th of that year. These dates are usually included in the minute entry that the court issues from the hearing where you're appointed as conservator. The estate budget, you'll use Form 5. Schedule 1 will be for receipts and disbursements. Worksheet A gives details, allows you to provide details on the receipts that have come into the estate and the disbursements that have gone out. Schedule 2 includes net assets or liabilities of the estate. And Worksheet B to Schedule 2 provides you the opportunity to list information and details regarding those assets and liabilities. And Schedule 3 is the important sustainability analysis. How long will the assets of the conservatorship last? Worksheet C to Schedule 3 allows you to provide for some adjustments to that. You'll file your estate budget. The deadline for doing so will most likely be in the minute entry that the court issued when you were appointed as conservator. You'll file the budget and you'll set a time for a non-appearance hearing. A non-appearance hearing is just what it sounds like. It's a hearing where you do not need to appear. Nobody needs to appear. An appearance hearing, if you have something that is called an appearance hearing, you have to appear. Might be telephonically, might be in person, but you have to appear. A non-appearance hearing, you don't have to appear unless the court tells you to and changes it to an appearance hearing. And if someone files an objection before the non-appearance hearing, the court will most likely do that and change the date and change the hearing to an appearance hearing. You'll set the time for that hearing at the time of the appointment. So the minute entry that appoints you as conservator will tell you the date that your estate budget is due, and will set the time for the non-appearance hearing for the court to consider and hopefully approve that budget. You then must provide notice to all parties who are entitled to notice. You must provide notice of the time of that hearing. As I said, you do not need to appear. The court will consider your budget that you've provided and will either approve it, disapprove it, or perhaps modify it to further the protected person's best interests at that time. After you've filed your initial budget, you may find a time where you need to file an amendment to the budget. Amendment occurs when there is what we call a reportable adjustment, as referenced in Rule 30.3 capital D. A reportable adjustment is when a particular line of the budget needs to be changed by at least 10% of the budgeted amount or more than $2,000, whichever is greater. So if there is a change, if you're going through the conservatorship after you filed the budget and you say, oh, wait a minute, there's a change here on one particular line, perhaps it's more income than you expected or an asset is worth more than you had anticipated, you need to file an amendment to the budget, provided that that change is 10% of the budgeted amount or $2,000, whichever is greater. Next, we get into the filing of your first conservatorship account using Form 6. And for that, I will send you over to one of our court accountants, Terry Ernster.
The first annual account of the conservator is completed on Form 6. All of the conservator forms are sequentially numbered. Form 5 is for the budget. Form 6 will be used for the first annual account. The starting date of your first annual account will be the date that the letters of appointment were first issued, whether they were temporary or permanent. And the end date of the first annual account will be the last date of the 9th month after the permanent letters were issued. So this goes hand in hand with the budget that Commissioner Russell had mentioned. And by way of example, here are some dates. If you were appointed temporary conservator on January 5th, and you were then appointed permanent conservator on March 15th, your first account period should run from January 5th through December 31st of that year. And the due date for that first annual accounting will be March 15th of the following year. That is 1 year from the date of your permanent appointment. All subsequent annual accountings are then going to be dated from January 1st through December 31st and due by the end of March each following year. If there was no temporary conservator period and you were appointed permanent conservator on February 1st, your first annual accounting will be from February 1st through November 30th and due by February 1st of the following year. Subsequent annual accounts will then be for the period of December 1st through November 30th and always due by the end of the month of February in the following year. These are by Arizona state statute, and you should follow these date frames unless otherwise ordered by the court. Your Form 6 is going to be supported by the inventory and appraisement form that you completed and filed with the court earlier, and an itemized transaction log that will be submitted along with the Form 6 upon your filing. The transaction log is a key document. You need to itemize all money received and all money spent for the benefit of the protected person. In the conservator account form instructions, there is an example of what should be included as minimum requirement of a transaction log. The transaction log subtotals must equal the line category amounts you report on Schedule 1 of Form 6. Your starting point for your annual account will be from your Form 5, Schedule 2, Column B. That was your inventory and appraisement values as of the date of your appointment that you filed with the court. And that will become your beginning inventory value on Form 6, Schedule 2, Column A. The end of your account period, at the end of the accounting period, the inventory estate values will then be reported on Schedule 2, Column B. You need to record all of the activity for the benefit of the protected person from the date your letters of appointment were issued. You need to maintain that record on an itemized transaction log. You will record all monies received and all monies spent for the benefit of the protected person. The transaction log must be sorted by the line item category that will match on Schedule 1 of Form 6 for that same category name. Here's an example of a Schedule 1. Column A is going to report any past activity. This will not be something that you will need to be concerned with on the first annual accounting. There has been no past. But your subsequent accounts, Column A will be utilized. Columns B through E represent the present activity. Column B is your current budget, and Column C is your actual expense and money received during the account period. Column F and Column G are for the future. This is where you're going to include your next year budget for the benefit of that protected person. The top part of the form is where you're going to record all the receipts from lines 3 through 7, all monies received. Lines 11 through 17 are disbursements that are essential for the survival and maintenance of the protected person. And lines 18 through 22 is for money spent for the administration of the conservatorship, legal fees, fiduciary fees, and administrative costs. Line 7 is where you record other receipts. Worksheet A supports the amount on line 7, but only for column F for the budget. Any amounts reported on line 7, column C, are supported on your itemized transaction log. And here is line 7, column F, that should have the itemized support noted on Worksheet A. And here's the area on Worksheet A that you will complete for line 7. Line 16, other disbursements. Again, you will use Worksheet A only to support the amount that you include in the budget for other disbursements in column F. On Schedule 1, column F, line 16, this is the area of the budget that you've budgeted for other disbursements. And on Worksheet A, this is the area where you will complete the itemized information to support that budgeted amount. Line 21 is for other administrative fees and costs. Again, use Worksheet A to support any amounts budgeted for other administrative fees and costs. On Schedule 1, column F, here is the budget line 21 for other administrative fees and costs. And on Worksheet A, this is the area you will complete to support that number. Schedule 1, line 9, is the line item that you will use to convert a non-cash asset to cash. For example, if there were real property in the conservatorship that was sold so that the protected person would have the cash available for their expenses, the income received from the sale of that asset will be reported on line 7 as other receipts, and then it's removed from the total income on line 9 so that the total income represented to the court only shows the normal income. The sale of the asset is recognized in line 7. It's just not recognized in the total income for the estate during that year. Line 24 is where you will back out of the disbursements any costs or expenses related to converting a non-cash asset to cash. Schedule 1 and Schedule 2 integrate together, and if you complete these forms on a computer, when you fill in the fields on the computer, they will autofill to the next schedule. So if you do it manually, you have to remember to integrate your Schedule 1 and your Schedule 2. Your line 8 of total receipts on Schedule 1, column C, will go to Schedule 2, column B, line 21. And your total disbursements on line 23, column C, will go to Schedule 2, column B, in Section 2, line 23. Here's a copy of our Schedule 2. And our column A is our past inventory, our beginning inventory, which is derived from our Form 5, column B. Columns B, C, and D are our current inventory at the end of the account period. Column B is where you'll put in that updated inventory balance. Column C, if you've done this on a computer, will calculate for the amount of the difference in the inventory value, and column D will change that to a percentage. Column E allows you a small area to give us an explanation for the change in value. Section 2 is seen down below, and this is for cash reconciliation. This is where the total receipts and the total disbursements integrate from Schedule 1 to balance for the cash of the conservatorship. The inventory categories on Schedule 2, most of the line items are very specific, where it says real property, vehicles, personal property. Line 8 is for other general assets. And you will put on other general assets non-cash assets, such as the cash value of a life insurance policy, a coin collection, appraised jewelry, or precious gems. They have a value worth, however, they are not readily turned into cash unless they're sold or, in the case of a policy, cashed in. The line 13 on Schedule 2 is for other money-denominated assets. These are assets that can be readily used for cash, such as a prepaid debit card or a prepaid store card. These can be used instantaneously to provide for the protected person. Whether it's a general asset or an other money-denominated asset, you need to provide the details of those amounts that you report on Schedule 2 using Worksheet B. And here's the areas on Worksheet B that you will report those types of assets. The first columns are for other general assets on line 8, and the second set of columns is for the other money-denominated assets reported on line 13. With your Schedule 2, column B, you're going to include the ending balance of any financial accounts in the name of the conservatorship. With each financial account, you must submit a financial account statement that is inclusive of the account period end date that supports the ending balance you're reporting on Schedule 2, column B, for any of the financial accounts. These could be checking accounts, savings accounts, retirement funds, annuities, cash values of insurance policies, Anything of cash value that's in an institution must be supported by an account statement. The integration of Schedule 1 to Schedule 3 of the accounting is with the net income and the net disbursements. Net income from line 10, which is the amount represented if there were assets sold and removed from income on line 9. Line 10 represents that net income amount of the estate, and line 25 is the net disbursements. From Schedule 1, those will feed to Schedule 3, which is the sustainability schedule. Column A of the sustainability schedule is the past information. And again, from a prior period, this information will not be available in your first annual account. There was no past activity. Column B, column C, and column D will represent the present account period that you're reporting on, and that is where the net income and the net disbursements will be included. The sustainability analysis, if you don't complete this form on a computer where it will auto-calculate for you, the formula is very simple. You will use line 4 and divide it by line 7. If there are any adjustments to the net income or the net disbursements that were not included on Schedule 1, you must include those on Schedule 3 and complete Worksheet C to support the information for those adjustments. The sustainability analysis allows the court to have some type of determination on how long the assets of the estate will sustain the protected person. All subsequent accounts are then filed on Form 7. Form 7 looks the same as Form 6. It contains the same Schedule 1, Schedule 2, and Schedule 3, Worksheet A, Worksheet B, and Worksheet C. All of the information that we've gone over related to Form 6 is the same instruction that you will use to complete subsequent accountings on Form 7. The only thing that is different with the annual account, the subsequent annual accounting, is that the due date goes from the date of your letters of appointment to the end of that month. So for an example, if the first account period ended on June 30th, the start of your subsequent account period will be July 1st, and the end date will be June 30th, and it will be due by September 30th. Your letters were probably issued sometime during September. However, we allow for the due date to go to the end of the month. Common mistakes filing an annual account. The failure to include bank and investment account statements that are inclusive of the account period end date. So again, if your account period end date is September 30th, the financial statements that you submit must include September 30th date. Not necessarily the end date of the statement, but the statement must include that date. For your first annual accounting, the beginning balance not on Schedule 2, Column A, not being equal to the inventory and appraisement that you filed with the court 90 days after being appointed. People will make this mistake. They'll file their inventory and appraisement, and then they'll find an asset during the account period and just simply add it to Column A, and then there's no gain realized, and we can't allow for that. The inventory and appraisement that you file is your beginning balance, and if you find assets, you will include their ending values in Column B, and the gain for that asset is then recognized in Column C of Schedule 2. Another error that people make is using the incorrect account period. Again, if you're not sure of the account period that you should be reporting on, read the minute entry that appointed you conservator, and there should be an order in that minute entry that defines your account period. Not including or including non-conservatorship transactions in a conservatorship accounting. If there's a trust in the name for the benefit of the protected person, no activity of the trust should be included in the conservatorship. Again, the trust is a separate entity, and that is governed not through the conservatorship. And failure to provide a proposed form of order. You must provide a proposed form of order that is related to the request to approve your annual accounting so that the court has an order to sign. And another error is the misuse of Worksheet A. Again, Worksheet A is designed to support your detailed information for other receipts, other disbursements, and other administrative fees and costs that are reported in column F, not in column C. Documentation that might be needed to support your accounting information is if there is a large transaction, such as the sale of real property or sale of an asset for a large amount. With any sale of property, you're going to have a HUD statement, and it's best that you include a copy of the HUD statement with your accounting so that we don't have any questions as to the amount of money received from that sale. And if there's any issues with the cash account balances, please include any copies of account reconciliations that will support the ending balance you are reporting on Schedule 2. And if there's any contract work done or invoices for large purchases, please include those so that we can recognize what activity has occurred for the benefit of the protected person during the account period. When you file the account, the paperwork that's going to be required is a petition requesting approval of the account. That you will file, and that is a non-confidential document. You will include your account form 6 and then subsequently account form 7, and all of that is inclusive of all the schedules and all the worksheets. You will file that as a confidential document along with the itemized transaction log. If you have fiduciary and attorney fee statements, you should submit those at the same time that you file the accounting. If you don't have the fee statements and you have the accounting ready, that's fine, you can file the accounting. However, please notify the attorneys that you have filed the accounting so that they can file their related fee statements with the court. And again, include that proposed form of order that's related to the approval of this accounting so that the court has a document to sign for approval. When you file the annual account, there is a $300 filing fee. You need to pay that filing fee, and you should have copies of everything being filed in addition to the financial account statements marked to be provided to the court accountant's office. And anyone else that you need to notice with this accounting, you need to provide them copies of what you file. You do not need to provide a copy of the filing with the judicial officer at this time. Again, if you have the attorney or fiduciary fee statement ready that can be filed with your annual accounting, please include that when you file the original accounting. Any fiduciary or attorney that is requesting payment for their fees and costs must submit a fee statement as per Rule 33. The petition for the fee statement must include the detailed statements of what the tasks were that were performed for the benefit of the protected person. The itemized information included in the fee statement must include the date, the task formed, the time, the name of the person who did the task, and the hourly rate being charged for that particular task. The fee statement should be for the same period as the annual account period. When the fee statements are reviewed, the fees that are incurred or claimed must match for the account period. And if the fees were not paid by the end of the account period, That is a liability debt of the estate that should be reported on Schedule 2, Column B, line 16. And here is an example of Schedule 2, line 16, where you will report any unpaid fiduciary or legal fees and costs. The court accountant will generally review your annual accounting within 90 days from your filing of it. Upon completion of the review, the court accountant will issue a court accountant's report and recommendation. The initial review will either recommend approval or recommend a response. If approval is recommended, the court accountant will set a non-appearance hearing date generally within 45 days, and you'll get the copy of that report that gives you the hearing date and time, and notice that it is a non-appearance, and it's your responsibility to provide notice to interested parties of that date and time. Again, the non-appearance hearing date, you need not attend. You must provide the proposed form of order for the court to sign prior to that hearing date. If you want a copy of that signed order, you must provide stamped self-addressed envelopes for all interested parties to receive a copy of the signed order. During the non-appearance hearing date, the court will review your petition, they will review the accounting, they will review the fee statements submitted by the attorneys and fiduciaries, and they will review any objections that might have been filed prior to that non-appearance hearing date. If the court accountant has recommended approval, the judicial officer will sign the order approving the accounting. If upon that initial review the court accountant has determined that a response is necessary, you will be given generally 45 days to respond, and you must address all of the issues in that court accountant's report and recommendation. Attach all documentation that's being requested, and if an amended account is being recommended, you must prepare an amended accounting and submit that also in time of your response. If the issues and concerns are not taken care of by the time the 45 days has lapsed, generally then the judicial officer will want an appearance hearing set to give you the opportunity to address in court the reasons for being unable to prepare a satisfactory account. If there is an appearance hearing date set, you again will be notified of that, and you must provide notice of that hearing to all interested parties to give them an opportunity to also attend. And you, and if you have an attorney or if there's a court-appointed attorney for the protected person, must attend the hearing. Thank you for watching this video. If you have further need to find information, here's a list of resources of different websites that you can go to find information on how to help you finish and complete an annual accounting.